So let's have a look at natural gas very quickly. As you know, I'm long from $2.65, actually 6450, and I've got a hedge just below that, 259, and we moved up quite sharply on Friday. It's now the weekend. We got up to about 280. Now we've got this level above us, this channel top, and above there, we've got a gap up into $3, which is what I'm looking at very carefully at the moment. This is the 4-hour chart. That's the top that we reached during last week, up against that channel top and that 280 level, just below this gap from $3 after we rallied back up there, back down to about $2.80. And we're at $2.80 right now, going into the open for next week on Sunday night in a few hours' time from now, my time. If we examine this on the day chart, you can see how this looks. So we had this big bearish day, consolidation day on Thursday, and then on Friday this rally back up to $2.80, just shy of this channel top, this upward channel trend line. And there's the move up to $3 that we had in March, and then the gap down to $2.80, which is exactly where the price closed on Friday, $2.80. Actually 277 or 279, depending on your broker. I think what we're going to see at the open is either a gap up through this channel top and last week's highs, taking us above this channel, above $2.88, and up to around about $3. That might take a gap up to, let's say, $2.89, $2.90 at the open, and then a move up during the early part of the week up to $3, where I'll be exiting my long position and potentially looking for a short position for a retracement back into this zone over here. I don't really want to predict that that's going to happen. I think that's a strong possibility, and a gap up above these highs, in other words, just to close that little bit there, above this channel line, and then a move up during Monday or Tuesday up to $3, and then a rejection from there would be very plausible, possible, and potentially even probable scenario. The other option, of course, is that we just open where we are at the moment and that we edge higher, dash into that channel top and this high at 288, and then eventually break through there and move up to $3 before a rejection. Or we could gap down, perhaps down to $2.65, 64, and then begin to move down into some of these lower levels before moving higher. So there are various things that could work out depending on how this week opens, and whether we see a gap up or down, we just open at the same price. I think there is quite a strong possibility that we gap up to above this channel top and move up to $3 before then hesitating, perhaps consolidating or collapsing back down from there. If that was to occur and we manage to actually move higher than $3, then our next target is $3.40, 50, 60 or 75 up into this region here. If I just zoom out a bit, you can see the 200-day moving averages also just creeping down into that zone. Talking about moving averages, below us we've got the 20 just curling up into the top of this pink resistance or now support level, and we've got the 50 now starting to curl up quite convincingly. After moving down and then flatlining for a long time, we've now started to move up quite beautifully. So we've got these two moving averages at the pink and the blue support levels below us acting as support. And of course we've got these levels, we've got the channel bottom, and then we've got the very strong $2.15 level, and then of course below that we've got $2, and potentially down below $2 we've got $1.80 and $1.50. Don't think we need to worry about those too much at the moment, because we're now trading around the top of the channel, and all focus is on whether we can break up through this channel top, last week's highs, and reach up to $3, where we'll have to see what happens. So that's the overall scenario for natural gas. And I think I'll feel more comfortable in outlining my strategy on natural gas as we move into next week. So all eyes right now on this channel top. Can we gap up to there, edge up to there, break through there, and reach $3 before deciding what to do? Or are we going to drift down lower at the beginning of the week into some of these support levels below us? We'll have to see how the market opens on Sunday. But for the moment, I'm holding my long position, and I'm willing to hedge that position at $2.59. That's just below these two lows, and look to add to the long side of that hedge if we get down into the 250 to 245 region, and potentially even a move down to about 230 now, somewhere near this channel bottom. So that's the overall strategy for natural gas, and there's really not much I'm going to do about it until we see how the market opens a little bit later on, and we see the opening gambits or the opening moves going into next week. So far no changes, just holding on to that position from $2.65 or slightly below that, and looking for a move higher, perhaps a gap up into $2.88, top of this channel line, and then a move from there up to $3, where I'll exit my long positions and then decide what to do thereafter, depending on price action and whatever else might be influencing the market in the broader economic macro structure and chaos that's going on around the world at the moment.